We're looking for another strong jobs report, and the only question... Dumois.
Yeah, okay, thank you for that.
I don't do French at all.
No. Okay.
I do Russian, though.
Yeah, you do.
The question of whether there are enough workers... Wait. No, I'm not going to do the... The question is whether there's enough workers to fill the open jobs. Take a look here at what we're expecting. 190,000 is the consensus. 164 last month. Unemployment rate seen holding steady, and modest job gains, and we can talk about that to the end of the world. Why, with a shortage of workers, average hourly wages seem to be so modest. May ADP payroll is coming in at 178. But take a look here. This is the JOLT survey. This is the jobs openings. You can see we're at or near a record high, 6.4 million jobs open.
Can I ask you a question? We've had a few economists say that that's the number they most closely watch, the job openings and labor turnovers. What does that tell you when the chart's going pretty much straight up?
It tells you there are a lot of people out there. And also the other thing we look at is the opening. It tells you the economy is doing well. It tells you that there are employers looking for workers. And
workers you feel comfortable quitting and looking for another
job.
Well,
the quit rate is a separate thing. I can look at that, and I haven't looked at that this morning. But one thing we look at is the job openings rate, which is the number of openings compared to all the jobs. It's also at or near a record high. So that's a good thing. Now, here's what happens. A downward trend on participation rate because of baby boomer retirements. So the effect on the participation rate is to keep the rate flat. So think about this. It's coming down, and now what you have is the strong jobs number exerts this upward pressure on the participation. It stops it from falling. It would naturally be falling because of baby boomer retirement. And that's really the key that we're looking for here. Does that make sense?
No. You think people are sticking in?
People could be sticking around, drawn back into the workforce. You could have a situation where, for example, think about a recession where what we see is more younger people going to college than would otherwise go because the opportunity cost of being in college versus working is less right there. So just, you know what, I'm not giving up a good job. I'm going to go to school and enhance my skills. Right now it's the opposite, right? You have situations where oil field workers and all kinds of trade jobs are out there. So you know what, I'm going to go take that job, so it pulls people in, so it keeps it from falling more.
We haven't had to deal with these issues in a very long time.
They're good problems to have.
No, they're great problems to have. I'm saying we haven't had to, the kinds of, the way we've looked at these numbers historically, we haven't had to spend so much time thinking about this possibility.
And I think the reason we spend a little more time with it is because these are new metrics like job openings rate. The quit rate. These are not ones that everybody's used to. Give me the unemployment rate. Give me the stuff I know. But these are new ways of thinking about, you know, are we going to be able to fill the jobs that are out there? How tight is the labor market? And then we can have this discussion about why it's not showing up in wages.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.